Over the past few years, the technology industry has experienced repeated waves of layoffs. Large companies that once hired thousands of engineers suddenly began reducing their workforce. For many people, this created a confusing contradiction. If software continues expanding across the global economy, why do technology companies keep laying off employees? Understanding this pattern requires looking at how the technology industry actually grows. Now, salary breakdown. Software engineering remains one of the highest-paying professional careers in the modern economy. Entry-level engineers in the United States often earn between $80,000 and $110,000 per year, depending on location and company size. Mid-level engineers frequently earn between $120,000 and $160,000. Senior engineers working in large technology companies may earn well above $200,000 in total compensation. These salary levels reflect the enormous economic value created by modern software systems. Now, market demand. Another reason layoffs appear dramatic in the technology sector is the scale at which large companies operate. Major technology firms may employ tens of thousands of engineers across multiple divisions. When these companies adjust their workforce, even a small percentage reduction can translate into thousands of employees. From the outside, this can appear like a massive collapse in the industry. In reality, many of these companies continue operating profitable platforms with large engineering teams. The layoffs often reflect adjustments in hiring strategies rather than a disappearance of software demand itself. Demand for software engineers has not disappeared. Companies across healthcare, finance, logistics, manufacturing, and entertainment increasingly rely on complex digital infrastructure. However, demand does not grow in a perfectly smooth line. Technology companies often expand rapidly during growth cycles and then stabilize once their platforms reach maturity. During those stabilization phases, companies may reduce hiring or restructure teams, even though software development itself continues growing. Now, competition level. Another factor behind layoffs is how technology companies respond to investor expectations. During periods of rapid economic growth, investors often reward companies for expanding quickly. This encourages organizations to hire aggressively in order to build new products and capture market share. However, when economic conditions become uncertain, investors often shift their focus toward efficiency and profitability. Companies then respond by slowing hiring or restructuring teams in order to reduce operational costs. This shift from expansion to efficiency can trigger layoffs, even while the underlying business remains strong. The rapid expansion of the technology sector during the previous decade encouraged many companies to hire aggressively. Organizations sometimes expanded engineering teams faster than their long-term infrastructure actually required. When economic conditions change or growth slows, companies may reassess how many engineers are needed to maintain existing systems. This reassessment can lead to layoffs even in companies that remain profitable. Now, structural reality. Another structural change affecting employment in technology is the increasing leverage of modern engineering tools. Cloud infrastructure platforms, automated deployment pipelines, and artificial intelligence-assisted development tools allow engineers to work more efficiently than in previous decades. Teams that once required dozens of engineers may now operate effectively with significantly fewer people. This increased productivity allows companies to scale systems without expanding their workforce at the same rate as before. As a result, the relationship between software growth and engineering headcount becomes less direct. Another important factor is the efficiency of modern engineering tools. Automation platforms, cloud infrastructure, and developer productivity tools allow smaller teams to manage larger systems than before. A team of skilled engineers today can operate infrastructure that previously required significantly larger teams. As tools improve, companies sometimes restructure engineering organizations around smaller, more specialized groups. Now, long-term outlook. Despite these cycles, the long-term outlook for software engineering remains strong. Software systems continue expanding into nearly every industry. Artificial intelligence, cloud infrastructure, financial technology, and digital healthcare platforms all require complex engineering systems. While individual companies may restructure teams, the overall demand for skilled engineers across the global economy continues increasing. Now, positioning strategy. Engineers who remain adaptable during industry cycles often focus on building deeper technical capabilities. Understanding distributed systems, infrastructure reliability, cloud architecture, and large-scale data systems often increases resilience during hiring slowdowns. Developers who can operate complex systems tend to remain valuable, even when companies reduce hiring. Now, risk and resilience. Technology careers have always included cycles of expansion and consolidation. During growth phases, companies hire rapidly. During slower economic periods, they may reorganize teams to improve efficiency. Engineers who expect a perfectly stable job market may feel surprised by these shifts. However, developers who continue strengthening their technical skills usually remain competitive as the industry evolves. Now, final verdict. Tech layoffs do not mean the software industry is collapsing. They often reflect the normal cycles of growth, restructuring, and efficiency that occur inside rapidly evolving industries. Engineers who understand these cycles are often better prepared to navigate the long-term reality of technology careers.